Imagine this. It's March 2014. Tesla is still a relatively young company, led by the ever-ambitious Elon Musk. The Model S is gaining traction, but many investors remain skeptical. Traditional automakers dominate the industry, and electric vehicles are seen as a niche market. The idea that Tesla could one day become one of the most valuable companies in the world seems far-fetched. Now, fast forward to today. Tesla has skyrocketed in value, revolutionized the automotive industry, and become a household name. But what if you had seen the potential early on? What if, a decade ago, you decided to invest just $1,000 in Tesla stock? How much would that be worth today? And what key events shaped Tesla's rise to dominance? Let's break it down. The state of Tesla in 2014. To understand the potential of that $1,000 investment, we first need to look at where Tesla stood a decade ago. In 2014, Tesla was still in its early growth phase. The company had gone public in 2010 at just $17 per share, but by 2014, its stock had already experienced significant growth, trading at around $40 to $50 per share after adjusting for splits. Tesla had only one main car on the market, the Model S. The Model 3, which would later become a game-changer, had not yet been announced. Electric vehicles, or EVs, were still a niche product, and most car buyers were skeptical about their practicality. Major automakers were barely considering EVs serious competition. The idea that Tesla could outsell companies like Ford, GM, or even Toyota seemed like a fantasy. But for those who believed in Tesla's vision, the opportunity to invest at this early stage was massive. How much would $1,000 be worth today? Now, let's get into the numbers. Suppose you invested $1,000 in Tesla stock in early 2014. At that time, Tesla's stock was trading at roughly $45 per share adjusted for stock splits. With $1,000, you could have bought around 22 shares. Over the next decade, Tesla's stock underwent multiple stock splits. A 5-for-1 stock split in August 2020, a 3-for-1 stock split in August 2022. These splits mean that each original share from 2014 turned into 15 shares after both splits. So those initial 22 shares would have grown to 330 shares today. Now, let's consider Tesla's stock price in 2024. Suppose it's trading at around $180 per share. Prices fluctuate, but this is a rough estimate based on its 2023 performance. So, your 330 shares times $180 per share would now be worth approximately $59,400. Yes, you heard that right. A simple $1,000 investment in Tesla just 10 years ago would be worth nearly 60 times more today. What drove Tesla's massive growth? Tesla's rise wasn't just luck. Several key events contributed to its explosive growth. The launch of the Model 3 2016 to 2017. The Model 3 was Tesla's attempt at making EVs mainstream. With a starting price around $35,000, it was far more affordable than the Model S. The demand was staggering. Hundreds of thousands of pre-orders flooded in, proving that consumers were ready for electric cars. Gigafactories and mass production. 2016 present. One of Tesla's biggest hurdles was manufacturing capacity. To solve this, the company built massive gigafactories around the world, significantly reducing costs and improving production efficiency. Stock market boom and inclusion in the S&P 500 2020. In December 2020, Tesla was added to the S&P 500 index. This was a major moment, as it forced institutional investors and funds to buy Tesla stock, driving prices even higher. Autonomous driving and FSD. Full self-driving. Tesla's push for self-driving technology kept it at the forefront of innovation. Despite controversies and regulatory challenges, full self-driving FSD became a major selling point, attracting investors who believed in the future of autonomous vehicles. Global expansion. Tesla expanded into China, Europe, and beyond, opening new markets and increasing revenue streams. The Shanghai Gigafactory played a crucial role in scaling production and cutting costs. Energy business and future innovations. Beyond cars, Tesla diversified into battery storage, solar energy, and AI-driven robotics. Many investors saw Tesla not just as a car company, but as a tech giant with limitless potential. What if you had invested even more? If $1,000 could turn into nearly $60,000, Imagine if you had invested more. $5,000, investment gives $297,000 today. $10,000, investment gives $594,000 today. $50,000, investment gives $2.97 million today. Of course, hindsight is 20/20ths, and no one can predict the future with certainty. But Tesla's growth is a perfect example of how long-term investing can pay off massively. Lessons for future investors: early adopters win big. Those who believed in Tesla early on saw the biggest rewards. Investing in disruptive technology before the mainstream accepts it can yield life-changing returns. Stock splits matter. Many investors underestimate the power of stock splits. Tesla's multiple splits made its stock more accessible, attracting more investors and driving up value. Market volatility is normal. Tesla's journey wasn't smooth. The stock had multiple crashes, falling over 30% several times. But those who held on were rewarded. Final thoughts. Looking back, investing $1,000 in Tesla in 2014 would have been one of the best financial decisions you could have made. What seemed like a risky bet at the time turned into a fortune. But this story isn't just about Tesla, it's about recognizing potential before the rest of the world does. The next Tesla could be out there right now. Maybe it's in AI, space exploration, biotech, or renewable energy.